let me ask you first about some things that have come through this morning in the numbers. Significantly weaker gas marketing and trading. I wonder if you could tell us a little bit more about what's going on in that part of the business.
Anna, good morning, and thanks for having me on. Maybe just first, if I could just say a few things about the results in general. Three things, maybe, if I could. First, tough quarter, clearly, at the end of a really tough year, and the full year results were hit hard by COVID. We all know about the worst recession since the 40s. It was a brutal year for the oil business with negative prices and so on. And of course, we made adjustments to our planning prices, which resulted in some write-offs. The good news, secondly, that the business continued to perform really well, Anna, and I'm incredibly grateful to our staff across the world. Strong safety, strong reliability. We're ahead of plan, actually, on taking out costs. Our costs now are back to levels not seen for 20 years, and net debt, as you said, down to 39 billion and on our way to 35. And then finally, strategically, a massive year for us with entering the wind business in the United States, doubling the number of retail sites, 4 new projects, so a lot going on in the strategic space. Gas trading, it was a difficult quarter in the fourth quarter. Weather was warmer in the United States than we thought and colder in Asia than we thought, and that made for some difficult trading conditions.
OK, so that sets out the big picture and that detail very nicely. Bernard, let me ask you about cash generation. Some colleagues pointing to maybe this being a difficult issue for BP of late, and wondering if we're going to see that changing in any way. What can you tell us about BP's ability to generate cash from here?
Well, it's a great question. We have made a commitment. Obviously, we have a financial framework. The first commitment, the first call on funds is our fixed and resilient dividend, 5.25 cents per share, which we reiterated today. We also have a plan in there to get our net debt down to $35 billion. In the middle of last year, it was probably well north of 50 at one stage. It's $38.9 billion at the end of the fourth quarter. That shows you how much progress we've made from a cash generation perspective, both on operating cash and on the divestments that we're doing. So we see a strong ability to get that net debt down to $35 billion by the end of this year, beginning of next. That then allows us to exercise our commitment around buybacks, which will kick in when we get to that level, and making sure that we maintain an investment-grade credit rating. So I'm very confident in the cash-generating potential of the company. We brought on 4 major projects last year. We'll bring on 4 more major projects this year. We got 3 big ones the year after in 2022, Mad Dog in the Gulf of Mexico, Mad Dog Phase 2, Tangguh in Indonesia, and Cassia in Trinidad. We're continuing to take cost out of the business. This is a core part of the plan. We're actually ahead of plan on the $2 to $3 billion per annum that we said we'd do this year, and we're going to do $3 to $4 billion by 2023. So confident in the cash generating capability of the company, confident in our ability to reach that net debt target by the end of this year, beginning of next, obviously subject to the environment, and finally confident that those buybacks will kick in once we reach that level.
Yes, any more timing around the buybacks, Bernard? I think previously you said fourth quarter 2021, first quarter 2022. You've set out some of the criteria there. Any thoughts on the timing? Same timing, Anna, and I think that's important. So at the end of the fourth quarter, which was a tough quarter, I think right across the sector with, as you said, refining margins particularly being hit hard in the fourth quarter. No change to that timeline, end of this year, beginning of next. It is obviously all dependent on the environment, and that is not just oil price, but refining margins and gas prices. But if you want to pick an oil price, we think we can do that in the range of $45 to $50. You've clearly set out a big change in the strategic direction for BP, Bernard, over the last year. You've been there around a year, so a good time to reflect on that. I wonder if the investor base, do you think you've work to do to convince them? I imagine the investor base is changing a lot. Perhaps you could give us a sense of how the investor base is changing, maybe some income funds less interested, but attracting other different types of investors. What's the story there? Well, it's a great question, Anna, and of course we are absolutely seeing some of that. The first thing I would say is that share prices are down across the entire sector, and that's because of COVID. Now that we've got vaccines, they're being rolled out, things are looking better, and our share price is probably up 40 or 50% from the lows of last year. Secondly, as regards to strategy, I think the shareholders they're very supportive, and I think if anything, Anna, over the holidays, I think there's sort of a growing strengthening around the belief in the strategy. But like anyone, they want to see delivery. They want to see us deliver, and that's what we're focused on. And we're in action now. We're in action on the basics of running the business reliably, running the operations reliably, bringing those projects on that I talk about, getting those costs down, getting that balance sheet sorted, doing what we're doing in solar. Nick Boyle of Lightsource BP seems to have an email in my inbox every day on a move that we're making on solar. Offshore wind now in the United States, we're into that, a new entry, and I hope to see more of that around the world. So I'm very optimistic about what we have to do, but we have to get on and execute in a disciplined way. It's as important the things we don't do as the things that we do. And today we'll be sharing in our presentation, some of the deals that we didn't do in the fourth quarter of last year. A big solar deal in America that didn't quite meet our returns threshold, and we walked away. So strategy is as much about what we don't do as what we do. I think investors are looking for proof points, and that's what we're focused on.